Hello friends, welcome back to another video. Now in this lecture we will look at two patterns which Bollinger Bands helps us in identifying some very high probability reversal trades. And these two patterns are W bottom, also known as double bottom, and M top, which is also known as double top. Let's see each one of these one by one. So first is M top. Now as the name says it all, the pattern is in the shape of alphabet M. Now this pattern M can come in various shapes and positions, but a valid M top is found when following conditions are met. So the first is the price makes a high outside the upper band or at least touch the upper band. The next criteria is the price makes a retracement back towards the middle band, that is this moving average line. And last criteria is price level bounces back towards the upper band and makes a second top outside the upper band. Now here please note, if the second top is lower than the first top, then it's an added advantage. So let's look at some valid M tops. I know this is a bit confusing, so next let's see some valid M tops. Now this is a chart of Pidilite and you can see the first top is made on the upper band here, and then price retraces back towards the mid moving average line. And after this again the price bounces and makes second top here, which is inside the upper band. And also note this second top is lower than the first top. So in this case all the three criteria of a valid M top are fulfilled. So this is a valid M top. Then the second example is from the stock Hindustan Unilever. Just notice this first top is outside the upper band and second top is inside the upper band, and also forming a bit lower than the first top. So this is also a valid M top pattern. Friends, I hope the concept of M tops are clear to you. Similarly, we have W bottoms, and as the name says it all, this pattern is in the shape of W. Now this can also comes in various shapes and positions, but a valid W bottom is found when first condition is the price level makes the low outside the lower band or at least touches the lower band. Then second criteria is the price makes a retracement back towards the middle band. Then third criteria is price level bounces back towards the lower band and makes a second low inside the lower band. Here also, if second bottom is higher than the first bottom, then it's an added advantage. Next, let's look at some valid W bottoms. Now this first example is from the stock HUL, and as you can see, price is stretching outside lower band here and forming a low outside the lower band. After this, price retraces back towards mid band and finally falls again to make another higher low, and that too inside the band. So we can classify this as a valid W pattern. Then again look at this GBP USD chart and see the first bottom formation outside the lower band and second bottom inside the band and higher than the first bottom. So this is also a valid W pattern. So friends, I hope by now you are clear with W and M patterns. But what's the use of these patterns in your trading or investing? Well, as said earlier, these are the reversal patterns and most often traders take entry on breakout of this neckline. This in fact acts as a confirmation. Many conservative traders take their targets at this mid moving average line, and many aggressive traders even take upper band as their target. Another question that you must raise at this point is, sir, why you are taking only those W and M pattern where first low or top is outside the band or just at the upper band? What's wrong with tops and bottoms forming inside the bands? Well, that's indeed a valid question. And the answer to this we have already seen in previous lectures of this course. So can you tell why we are taking one top or bottom outside the band and second inside? Well, the answer to this is that we are adding our confluence of volatility divergence. As we know, volatility at top A, which is outside the band, is higher than that of second top, that is at point B. So this adds on to the probability of reversal, and that's the power of Bollinger Bands. They help us in filtering out the high probability M's and W's from low probability or false double tops and double bottom patterns. Next, I will again go through all the examples discussed in this lecture again and further polish our WNM filtration criteria. Now our first example was this Pidilite chart where we got our valid M pattern. But if you are following the neck breakout strategy, then you can see in this case we didn't get any entry. Now in this second example which we have seen earlier, here in the example of stock HUL, we got our entry here at the neckline breakout and here also achieved our targets comfortably. Let's see what happened in next example. Here also in HUL example, we have our valid W pattern and we got our entry here at this neckline breakout and we got our target hit here at this candle. Then finally this was the example of GBP USD. Here also we got our valid W pattern, neckline breakout was here, but you can see we didn't get any profits here since entry was so close to upper band. So friends, we got our valid pattern, but what's wrong with this first example of Pidilite and second HUL examples where our trades were not successful, or in fact in Pidilite we didn't get any entry at all? Well, this means there must be something wrong with the existing WNM filtration criterias. So to boost further our WNM patterns for very high probability reversal trades, you need to consider two more conditions. And if you add these two conditions into existing WNM pattern criteria, then you can execute very good high probability profitable trades. So the first condition is that when WNM patterns form, they should not intersect mid-band or this mid-moving average line. Let's see what I mean by this. So in this example which we have seen earlier, just notice that W pattern is actually disturbing the mid-moving average line. That is here. So this W pattern is not suitable for trading. Now can you tell whether this is a valid M or not as per our new conditions? That is, it's valid, but should we use this for trading? Well, yes, it's not a valid M since this M is disturbing this mid-moving average line. That is here. That is, this lower swing should not come as low and go beyond this mid-moving average line. Finally, just tell me what about this W pattern in this SBI chart? Well, yes, it's a valid W pattern. Notice our W formation is not disturbing the middle line. This high is forming below the moving average line. So friends, I hope this first condition is clear to you. Then second condition to look out for best WNM patterns is to seek existing support and resistance level where Ws and Ms are forming. Now this is not a must-have condition like condition 1, but this condition adds more confluence or more power to WNM patterns. As you can see in this chart of SBI stock, we have a valid W pattern here. Please note one low is outside the lower band, then second low is inside the lower band. Also it's a higher low than the first. So it's a valid W pattern. But is it suitable for trading? So for this we will apply a first condition, that is, this W pattern is not disturbing the mid-moving average line. And lastly, when we look out for the previous price action, you will notice that this W pattern is forming at a previous support. So just imagine the power of this W pattern. And this is evident from the move after formation of this pattern. Friends, I hope this second condition is also clear to you. Also, the basic trading setup of WNM patterns is also clear to you. So now you can start scanning the charts and do the back testing of this high probability setup using Bollinger Band plus WNM patterns. But you will learn another advanced and high probability trading setup using WNM patterns in the strategies section ahead in this course.